class. Welcome to Chapter 19, the Federal Government Accounting. My name is Jose Rodriguez. Chapter 19 consists of three main sections: the Federal Financial Management Environment, the Federal Budget, and accounting principles and standards for federal agencies. But before I continue, I would like to quote the Constitution of the United States, Article 1, Section 9. And it says, "No money shall be drawn from the Treasury, but in consequence of appropriations made by law. And a regular statement and account of the receipts and expenditures of all public money shall be published from time to time." With that said, let's get on with the first section of the Federal Financial Management Environment. Agencies that oversee the accounting for the federal government are as follows: the Department of Treasury, Office of Management and Budget, Government Accountability Office, Federal Accounting Standards Advisory Board, and the federal agencies. The Department of Treasury acts as the chief accountant, the banker, central accounting and reporting. They develop government-wide consolidated financial statements. They manage cash receipts and disbursement, and also maintains the government-wide standard general ledger. Office of Management and Budget. They apportion enacted appropriations among agencies. They prepare the executive budget, prescribe the form and content of financial statements by following applicable accounting principles, standards, and requirements. They set forth the requirements for accounting and reporting on budget execution. And they also provide guidance on all matters related to budget preparation and execution. The Government Accountability Office. They prescribe principles and standards for federal agencies and also are the auditors of the financial statements. The Federal Accounting Standards Advisory Board. They develop and recommend accounting and financial reporting principles, standards, and related requirements. They were created by a joint agreement between the Treasury Department, Office of Management and Budget, and the Government Accountability Office. And their standards are recognized as GAAP under the AICPA Statement on Auditing Standards number 91. And last are the federal agencies, who prepares agency budget requests to be submitted to the President through the OMB. They establish and maintain effective accounting and financial reporting and also internal control. They implement and operate the SGL. And last, they prepare and submit proprietary reports, such as the actual revenues, expenses, gains, losses, and so on. The Federal Financial Management is a shared function of the legislative and executive branches of the federal government. I hope by now you're not confused by my accent, so just bear with me. Thank you. The next section is the federal budget. The federal government's budgetary process is unlike that of the SLG because its budget is not estimates due to Congress' ability to raise or lower the debt level to obtain additional cash. Further, Congress grants budget authority in the form of appropriations, contract authority, and borrowing authority. However, it is similar to that of state and local government in numerous ways. For example, the federal budget cycle has the same four main phases as that of the SLG. The preparation phase begins in the executive branch and involves a great deal of communication between the executive branch and all agencies within the government. It is concluded when the President's budget is presented to Congress. The Congress initially passes a resolution laying out general figures and levels of authority. The second phase, approval, is achieved when Congress passes an act, which contains the appropriations and makes it a legally binding document. The execution phase begins once the act is passed and involves a series of divisions or authorization levels of the initial appropriated amount. The first of this is apportionment, and it occurs when the OMB divides an appropriation by the time periods or by time periods, uses or activities for each agency. The agency then takes its apportionment and further divides it among itself into allotments. Commitments are then placed upon a portion of the allotment and are comparable to pre-encumbrances. Once an order for goods or services is finalized, an obligation replaces the preliminary commitment and is similar to an encumbrance. When the goods or services have been received, an expended appropriation is recorded. It is at this level of authority that the amount is actually charged against the original appropriation enacted in the law. If any of the subdivided levels of the original appropriation exceed either the appropriation or the next higher level in the hierarchy, then the budget authority has been exceeded. Exceeding the budget authority is punishable by law, and Congress determines whether or not to approve an exceeded budget authority appropriation. Finally, reporting for all of these classifications is done by each agency and submitted at established times to the OMB. The OMB serves as the central reporting agency for the entire government, and the reporting is shown in annual budgets and interim reports. The last section of Chapter 19 is Accounting Principles and Standards for Federal Agencies. The key items to note with this concept are that the federal model does differ from that of state and local government. It differs primarily in what the book calls the dual-track system. The dual-track system consists of a complete set of self-balancing accounts for both budgetary and proprietary amounts, and each set of self-balancing accounts reflects a different accounting equation. A little bit more about the dual-track system shortly. One item. Told you about my accent, but just bear with me, okay? One item which most students should be familiar with is that in the 1980s, the United States government developed the Standard General Ledger, the SGL. The SGL contains more than 300 separate accounts in its chart of accounts. The accounts are grouped into assets, liabilities, and so on. While the accounts obviously differ a bit from a private entity, the concept is a familiar one to anyone who has worked with an ERP system or any accounting program. Likewise, the fund structure of the federal system should be somewhat familiar. The fund structure can be broadly classified into funds derived from general taxing of revenue powers and from business operations, and to funds held by the government in the capacity of custodian or trustee. The 6 types of funds in these categories are general fund, special fund, revolving fund, management fund, trust funds, and last, deposits fund. However, the fund type does not influence accounting or financial reporting as it does in SLG. Rather, the federal entity is instead twofold. For budgetary purposes, the entity is each appropriation or other budget authority granted by Congress. Thus, each appropriation for each specific year has a complete standard GL. The proprietary entity is broader. The Treasury requires approximately 650 to 750 complete sets of primary proprietary financial statements each year. Imagine that. The dual track system requires a budgetary track entry to establish initial accountability and a proprietary entry to account for the transactions. Well, that's the end of Chapter 19, the Federal Government Accounting. I hope I was somewhat clear considering my accent, and wish you all good luck and best to you all, and thank you for listening.